Good afternoon. My name is Yvonne Powers, and I'm our product marketing lead here at Finexio. I'd like to welcome you and thank you for joining our exclusive webinar today on how to increase virtual card adoption from your suppliers in 2023. Now, a few topics have captured the attention of accounts payable team members like virtual cards. Virtual cards are valuable to AP teams because they can provide you and your suppliers peace of mind that their payments will settle faster, that they are the most secure form of payments, and provide easier reconciliation than ever before. So with the right approach, your AP team can drive strong supplier virtual card adoption through strategic supplier onboarding, having multiple delivery methods in place, and much more. Now, before we start, I'd like to go over a few housekeeping rules. First, note that this session will be recorded and it will be sent out to attendees sometime to follow after the webinar. If you have any questions, please use the webinar Q&A function to key in your questions. It should be at the bottom of your Zoom screen. During the webinar, our team will be reviewing your questions and we will have a Q&A session at the end. So today's agenda will be as follows. We're going to be going over the benefits of virtual cards and how they work. We're going to review overcoming barriers to virtual card adoption, strategies for effective supplier onboarding and management, how to increase adoption with multiple delivery methods in place, ways to maximize the impact of virtual cards on your bottom line, and then we'll go over some next steps in the Q&A. Now, I'd like to introduce you to today's webinar speakers here at Finexio, Chris Wyatt, our Chief Strategy Officer and Payments Leader across multiple companies and industries, as well as our CCO, Bill Fox, who is a former Deputy Chief of Economic and Cybercrime at the Philadelphia District Attorney's Office. You may have also heard him on the fraud webinar if you have attended that one. Combined, these payments veterans are credible sources in speaking to you all today on these topics. Now, Chris, you can take it away.
Well, thanks, Yvonne, and thanks everybody for joining today. Hopefully we give you a bit of a refresher history lesson on sort of the state of virtual cards in the AP space, as well as where we've seen things going, and obviously, you know, the benefits associated with cards for both you and your suppliers. So we always like to start with a little retrospective of sort of where we've been. And while I can't say we've completely sort of left sort of the old ways, there is this shift that has been happening over, really the past decade or so, when virtual cards really became prevalent throughout all verticals. But of course, traditionally, if you sort of think back when payments were made really manually, a lot of time-consuming, error-prone processes, right? Still dealing with a lot of paper. And again, I wish we were sort of out of the paper business, out of the check business. But old things die hard, especially when something like a check, which has been around for many thousands of years, if you really go back and look, old habits die hard. So, while there's a lot of players in the industry that look to advance, automate, really use and leverage technology to make things better, faster, and stronger. We're not done yet. So there's still work to be done. But I think what more and more companies, certainly that we deal with, have appreciated are a lot of the benefits that shifting to more electronic payments, virtual cards, as an example, have to offer. It really allows, for greater speed, transparency. Certainly the idea of things being more instant, effortless. There's just, taking paper out of the system removes a lot of human barriers, human elements to how we deal with payments. How, you as a buyer who has to issue payments, then ultimately the supplier as well. I think we've all seen, a lot of the challenges with the postal service, unfortunately, right? Things are just slower, things do get lost. And so a lot of what is available now through electronic means is, significantly safer, faster, and just a lot more transparent. Of course, with the additional benefits that we'll talk a little bit about with virtual card, which of course you can derive revenue from those in the form of interchange. But I think more importantly, sort of with that, it's looking at what sort of the office of the CFO is faced with today. There's a lot of economic pressures. I think we've all sort of seen recession, or what some people call a recession or a coming recession. The sort of the economic challenges certainly have been growing, rising interest rates, et cetera. And I think too, really the shift that I think a lot of us saw with COVID, where all of a sudden many more businesses are working remotely or have some type of hybrid remote work. Certainly Finexio saw that when a lot of our customers, were remote overnight, but they still had a lot of paper processes in place. So really exposed some of the gaps and shortfalls of, traditional AP process where you're relying on paper, et cetera. And so I think a lot of what we'll focus on today is how, virtual cards as one payment option can really help sort of accelerate that digital transformation, along with a lot of other benefits. So we, of course, love to look at research, sort of see what, AP teams, Office of the CFO is looking at. So of course, there's always a few common themes, especially when we think about virtual cards, streamlined payment workflows. Of course, there's a lot of AP automation software out there, which of course it tends to, or ideally reduces your operational costs and load. And that can be not only actual costs, but also, time savings. So your team can work on more important things. The idea that they should be working on a lot of what ends up being clerical work when it comes to, literally stuffing envelopes and signing checks, probably isn't the best use of time, especially given in this more constrained environment where, resources are at a premium, and you want to make sure every dollar you're spending on your staff and, really for your company is, money well spent. And then of course, security, right? And we'll touch on that, and Bill will touch on that, I think a lot of his background, but certainly with the rise of AI, deepfake, spear phishing, it's becoming more and more prevalent and just a lot harder to detect. And so the idea that every individual company is going to have some type of perfect sort of cybersecurity, fraud monitoring in place is, it's a tall order. And so that's where a company like Finexio and, other companies in the space are really looking to lend a hand. And of course, with virtual card, there's a cashback opportunity there. But just to be clear, a lot of research that's out there, 81% of companies are still making most of their payments via paper checks. Only about 58% of you out there currently use any type of e-payable solution, right? So that could be a virtual card, that could be ACH, it could be wire, it could be, something else. So while we've made progress, right, in 2023, still a lot of room to go. So hopefully we'll touch on some of the benefits of why you should get there if you're not sort of already sort of on that journey. Potentially, company like Finexio can help. So real quick primer for those of you that are not familiar with virtual cards. They're virtual because they're not plastic. They're either put in an email, delivered electronically. You can actually put these in physical mail, and we'll touch on that. But again, it's not. It'll just go out as a piece of paper, like 8.5 by 11 ink. There's really no plastic involved. And some of the key benefits here are certainly faster settlement. Unlike a check, you don't have to wait for it to get there. You don't have to wait for it to be cashed, and then for your bank to sort of give you access to that balance. So that can certainly improve cash flow, not only for you, but also for your suppliers. Overpayments, reconciliation issues tend to happen a lot less frequently. And we'll talk about some of the ways cards do that, but specifically, you can fix a card payment for a specific amount. You can only use one time or only up to a particular amount. And then I think the other things associated with that really start to hone in on just some of the fraud and transparency are the transaction details. So unlike most other payment methods with a card, the supplier or the vendor actually sees the transaction, right? You see it when they process a card, but also on the issuing side of the house, right? Which is where a company like Finexio plays. We're actually able to see those transaction details of exactly who processed that card, what is their business, what is their industry type, even down to the merchant terminal, right, where they actually process that card, right? So you think about that feedback loop that really allows companies like Finexio and our customers to better understand who's utilizing those cards. Is it appropriate? Is there anything to be concerned about? That all goes into an overall sort of fraud monitoring, transaction monitoring, process that we have and our companies that we work with can take advantage of to make sure that we're, delivering secure payments. I know Bill will touch on this, but certainly when you look at fraud rates, virtual cards are by far the lowest, and it's really not even close. It's effectively an order of magnitude, so less fraud associated with cards for various reasons, which we'll touch on. But again, it's very straightforward. If you've ever gotten a gift card, it's very akin to that, where you got a gift card for $100, you take it to Target, etc., cash it. Once it's used up, it's used up. At a very high level, that's the concept we're dealing with. And now, I'll hand it over to Bill to let him dig into some of the fraud and issues with acceptance.
Yeah, welcome everybody. And as Chris said, thanks for being here today for this. So we're going to talk about some of the anti-fraud aspects of virtual card that Chris touched on. So this is not a stock photo that I took off the internet. I took this picture at around 6:30 in the morning in New York, walking to the gym on a trip one day. And these were, you recognize that those are those check envelopes with the window, and they were spread all over the cobblestone streets of New York. So as Chris mentioned, and we'll talk about a little bit, there's multiple reasons why sending checks through the mail is a terrible idea. And it's not just because the check is so easy to commit fraud on, but also because unfortunately the US Postal Service, for all they're trying, is not the best way to move funds around the country. So I touched on this, why is it so easy to commit frauds on check? I mean, the high level answer is because it's a piece of paper with all your bank account information. So as you can imagine, somebody can create counterfeit checks. They can forge the drawer's signature. You can do duplicate presentment. That's the new one. Since you can now cash a check or deposit a check from your phone, you can make a fraudulent check and then have one person at the bank doing the same thing the person is doing mobily at the same time, or you can forge the endorsement. So this is kind of old school, new school ways that a piece of paper with all your bank account information on it can be defrauded. And when you see some of the statistics that we're going to talk about, it won't surprise you why, what I say is that, so I was a professional economic crime and cybercrime prosecutor, and then I've done quite a few cybercrime evaluations for companies in other lives. And usually the way people think about this is, well, if I'm going to have like really good cybersecurity and anti-fraud, it's going to be expensive, heavy lift, hard to do. Payments is one of the few areas where you can actually, as Chris said, order of magnitude reduce your attack service and actually create revenue share and efficiencies for the business at the same time. So this is a great slide. So think of this as if there's going to be like 100 fraud attempts or actual frauds in payments, this is sort of what that layout is going to look like. So, in essence, you can just see that checks are about 22 times more likely to be involved in a fraud than a virtual card is. And that's because virtual cards don't carry your bank account information. And traditionally, I think a lot of AP departments and CFOs, and we've been trained this way over the last 10 years. Well, I'll just go to ACH and that'll be more secure. So as you can even see here, ACH is still like 10 times more likely to be involved in fraud than a virtual card. And, only half as frequently as a check, but still pretty high percentage of that 100 attempts or 100 actual frauds. But what's really interesting is what's been happening over the last few years with ACH, which we'll talk about now. So this is a newer stats. So you're seeing this starting from 2019, and then you see from 2020 to now, it's just up and to the right. So when you go toward, this is well known in sort of the broad prosecution and cybersecurity realms, if there's economic pressures as we're moving into a compressed economy or a recession or however you want to look at it, there's going to be more and more fraud that's attempted as people get squeezed. So what we're seeing is a rapid increase in the amount of fraud on ACH. 210% in a year is astronomical. We're used to seeing these numbers maybe increase, as you can see from the bottom two, 2-3% a year, something like that. So there's been an astronomical increase in ACH fraud. So this is another reason to consider, when you're looking for a payment solution and you're deciding, okay, it's time that we do this, we're going to make this jump into digital payments, into e-payments, that you really look for a solution that is, going to give you all these options, and we'll talk about that later, but also is going to have the proper focus on vCard. So here's the prevalence of actual payments fraud. So one of the things I learned when I was prosecuting this stuff is that there can be a view like, hasn't happened to me yet, so not going to happen to me, I'm good. Not a good way to look at this. So I think it's really important that you understand that this is not like the, 1 in a million, probably won't happen to me. I'm just a, relatively modest sized business. I'm not like Microsoft or Apple or something, who's going to come after me. I think you really have to look at these statistics, and the thing to take away from them is somebody may be trying to do it now, or they may be trying to do it tomorrow. And the statistics that we looked at before should indicate that, the time to really decrease the attack surface of your organization and make sure this doesn't happen to you, because there's a tremendous cost on the back end, both reputational and otherwise, is to do this now. So we're going to go back over to Chris now.
Yeah, thanks, guys. And I think too, sort of wrapping up that section with Bill on the fraud, we've even seen, and we'll likely do another webinar podcast, on this, our, CFOs actually starting to reserve against the likelihood of fraud, either in the form of, just literally putting reserves aside, for when it happens, given it's, somewhat inevitable, depending on what, sort of what your time horizon is, or even reserving against, potential deductibles that they may have with, some of their insurance. So all very good topics, and something, we take very seriously, and I think is continuing to become, just more prevalent across, all the customer that we work with, and really all industries. But let's touch on virtual card adoption. That's always been a hot topic. It's like, oh, my suppliers won't take this, they're not going to take it. And some of that's true. I think at Finexio, we've done a very good job of identifying sort of best candidates for virtual card. And keep in mind, Finexio's approach has always been, this isn't forced down any, supplier or vendor's throat, but what we try to do is identify the very best prospects and create solutions that, ideally that work for them. But typical barriers that we see, lack of technology, they may just not accept credit cards of any kind. Tends to be less and less true these days, but we definitely still see it. Certainly the biggest one is cost. Everybody understands that there's a cost associated with accepting credit cards. There are ways around that, which again, we'll touch on, are ways to mitigate that, I'll say. Certainly complexity, certainly if, a merchant processor, merchant terminal that a supplier or vendor may use is not directly integrated into their accounting system or their ERP, could make the reconciliation more complex. Again, I think a lot of good technologies out there that helps, again, sort of mitigate that as a concern. And then just establish payment methods. This is just what we do. We don't take cards, or we only take cards in certain circumstances. There's a lot of that just sort of institutional inertia, if you will, that oftentimes is hard to get over. But Finexio's got an approach to that I think, that really the entire industry can learn from. I think we'll touch on some of this in the upcoming slides. So high level, there's a few steps that, we think about when we, look at how do we really drive optimal adoption of virtual cards, with the supplier base. Certainly there's a cleansing, enrichment, and enablement effort here, which we'll go into more detail on, but really making sure you know who you're talking to, making sure you have the correct data points such that you're having those conversations, you're having pointed conversations with the right people at the right time. Multiple delivery methods. We'll touch a little bit about this. Can be mentioned, certainly emails, a very common method, but there's others such as fax, even snail mail in some instances, or using phone like an IVR, or even logging into a portal like a lot of us do sort of as individuals or retail customers. Other ways to get around the fee objection are actually being able to offer variable interchange rates. So while there are some standard sort of virtual card rates that are ubiquitous and common within the industry, there is flexibility, and that really extends, beyond MasterCard, Visa, Discover, Amex, et cetera, all have sort of different interchange rates that are potentially available in certain circumstances. And then ultimately, and I know we'll touch on this, is really making sure that there's a holistic payment strategy where, because we know it's not a one size fits all, and making sure that you as a company are able to really offer that. We've seen this really being key towards helping to drive adoption when suppliers know that there's something else if there's an issue with a card or a card experience. So overcoming some of the barriers to virtual card adoption. Again, what is supplier enablement? There's a lot of this that's out there. So again, it's sort of this blend of technology along with real humans. And so, the way Finexio thinks about it is we take a very multimodal approach to how we actually engage suppliers. So that can certainly be email. It could be snail mail, like announcing a program, introducing suppliers to, hey, this is new. Your buyers are now offering this, and obviously, there's a human element. What we try to do is make sure that our team's not calling every single supplier, because certainly the cost of acquisition for that supplier to bring them into the network becomes prohibitive. If there's not a significant amount of spend with those suppliers, and so it's important to really have that multimodal approach so that you're able to reach the entire supplier base of a given customer, but you don't necessarily need to actually be on the phone with all of them to convert them, right? And so that's where your outreach techniques, along with the program types that you're offering, really do help drive that adoption up. And we'll talk more on that. But think about this, Finexio takes a very data-driven approach to how we look at supplier enablement. And I think that's becoming more and more important now that, really technology is ubiquitous, throughout the really the entire commerce landscape, if you will. The ability for companies to access things like, machine learning, big data, AI, data science, et cetera. It's actually fairly readily available now. And so Finexio, like many other companies, we take advantage of it. So for us, this begins with really cleansing a supplier base. So if you're one of our customers or prospect, you likely have a lot of suppliers in your ERP or accounting software. A lot of them are the same. That's pretty common. And so Finexio has become very good at is actually cleaning that supplier base, identifying duplicates, cleaning up those records so that, we're dealing with an AT&T, we're dealing with one AT&T, not 18 iterations of the exact same AT&T, but we had AT&T, et cetera. From there, you think about enriching, what we call enriching the landscape. So this is just getting more data points on a particular supplier. Again, think demographic information, name, address, email, what type of vertical are they in? So what's their size and sort of revenue wise, where they're located, potential competition out there. Again, you can think about, sort of peer group comparisons. And then you're able to take this wider data set that now is ideally clean and really start to leverage true machine learning, where rather than sort of finger in the wind, hoping, you can pick the right suppliers to go to, the machines can actually tell you. They can actually run through very complicated predictive models that typically you need a data scientist for, but there's a lot of great tools that are out there now that will really help you do that at scale quickly, without necessarily having to have an entire data science team. So certainly it's one of the things Finexio does to gain valuable insight as to who do we think is more likely to convert. So this has been true in sort of marketing and sales for a long time. If you think about lead scoring, if any of you guys use Salesforce out there, very common thing called HubSpot, right? There's this whole notion of lead scoring, so Finexio's brought that into our supplier enablement efforts so that when we're going after a particular supplier cohort, we've got a very good idea of who's more likely to say yes, who's more likely to say no, which then informs what we think of as a strategic focus, right? So leveraging those insights to make sure we're honing the right strategy or strategies for each supplier or supplier group. Again, so we're just being more sort of prescriptive, managing our resources better. And then really that precision targeted enablement, lets us focus our resources where they're going to have the most impact and most benefit, because we know there's particular suppliers and types of verticals that, they're just not going to take it. IRS is not going to take a virtual card. So there's no point in trying to think there is. Let's figure out how to pay, IRS via ACH, and we'll call it a day. And so if you think about these sort of 5 key pillars, this was really what helps us drive adoption, and just provide more, benefit ultimately to our customers. But we can go one level deeper. I think we've got another slide that sort of drills a little bit more into, the ML side of the house. So, really using predictive analytics. This is, again, like I said, becoming much more sort of readily available. And so we take advantage of it every day. Because again, oftentimes in the past, you would see even card providers say, well, we're going to see what, MasterCard's going to give you a match. We might get a match from Visa. We sort of think folks within this level of spend are going to say yes or going to say no. And those tend to be true, but a lot of that tends to be anecdotal. Right, where you've got an expert in the room that's been doing this for 20 or 30 years, which is great, right? And those do tend to be sort of directionally in the right area. But what we're able to do now is actually leverage true machine learning, where they're running, deep neural networks, et cetera, to really understand with a great degree of accuracy who's likely to say yes, who's likely to say no, and you can actually see the data, the attributes that are sort of influencing that likelihood to convert or not. So just want to give you guys an example of sort of how we look at the world, right? Because then this all goes together into what is our overall strategy to really push supplier adoption. From there, it's again about meeting the suppliers, where they're comfortable, where they're at. So yes, you can do a lot of this on the phone. So to a degree, you can do some of it on email. But ideally, the more you can push, suppliers, to an experience that's online, that sort of you can be hands off, let them do it sort of on their terms when it works for them. That's really what we try to push. We try to push that with our customers. So this is just an example of how we've approached it in the past with again just one customer who's out there publicly. You can Google them, you can see their experience, you can see the experience. But again, trying to make it very comfortable, simple, and familiar too. I mean, this is the thing. Everybody that's enrolling for a virtual card, we try to make the experience as sort of ubiquitous and sort of friendly as possible, right? Because certainly as individuals, as consumers, we've all signed up for stuff online. So we're not trying to reinvent the wheel there. We're just trying to make it very straightforward, simple, and clear, so that it feels like a good experience. It's something that they recognize, and we give them the information that they need. And then I think sort of, last, but certainly not least, certainly at least on this topic, is the notion of delivery. And so what we've seen, certainly over the years that, Bill and myself have been doing this is predominantly most of these cards have been delivered via email. So very effective, certainly the lowest cost to deliver cards, but it doesn't work for everybody. And so, I think we touched on phone and portal payments, and that it's certainly for a cohort of suppliers that are out there, that is how they say yes to accepting a card. And so I think if your strategy doesn't include those, some people will call those proxy payments. It should, because a lot of times you can, have that increased adoption if you just take the time to, phone it in, log on, or, work with somebody like us who, has automated a lot of that, has robots that do that for you. Fax, believe it or not, very big in healthcare still. It's HIPAA certified, so it's actually a secure way to transmit information. So we also found that you can actually fax payments, and they're readily accepted by a lot of folks in the healthcare and medical space. And then card by mail too. And so this is the other point that we wanted to make in terms of how you approach, the supplier base, not only with sort of the data you have at hand, but the ability and desire to actually communicate with them will really vary. So where you would think of as, picking up the phone as an opt-in model, hey, I'm calling on behalf of whomever, and I want to get you, signed up for virtual cards, that works with a particular cohort, but again, tends to be the most expensive. Where if you think of a card by mail, and this is literally where you put a 8.5 by 11 piece of paper with a single-use card in the mail, and you see what happens. You run it more as an opt-out model. So a supplier will get that, will look at it. X% of them are just going to take it. And I can tell you it's actually a very high percentage, because typically you're targeting your smaller suppliers, folks you're not spending as much with. So the cost to accept is less. So the receptivity to acceptance actually goes up significantly. But you're going to get a cohort that says, no, I can't take this, I won't take this. And so the idea is that's okay, but have them come to you, make it very easy for them to opt out, understand why they're saying no. Then ideally you can go back to them later, potentially with a solution that does work for them. And again, that sort of net end of the day increases your overall card adoption. And that's really what we're here to do. I'll pause there and hand it back over to Bill.
Okay, so we're going to talk a little bit about what you want to be looking for when you go to do, we're talking about all these changes and how much advantage there is. How do you think about looking for a holistic payment strategy and somebody to help you with that? You want to make sure that the vendor is going to take over all this, is going to take on, not take over, but take on all this supplier communication. So they're going to help your suppliers. Really, when you do this, you think about all the things that Chris discussed and that I discussed, you're offering your supplier technology and payment options that they've never had before. They could have been on 45-day check terms with you for years. And it's like all of a sudden somebody's calling them and saying, oh, I could get it in a couple of days electronically. Yeah, that sounds good. I can pay an interchange for that. So you want to make sure that, as Chris said, they're going to take on that communication and that they're using data and they're actually modernizing that operation. So it's not uncommon for businesses to be able to migrate like sort of 3 times as many suppliers on the virtual card as a sort of industry norm now, who don't use the kind of data and AI communication that, for instance, we use at Finexio. So when we talk about AP payments as a service, and when I talk to anyone about Finexio and my team, we start with we're AP payments as a service. So on day one, you're paper free. You're not signing, mailing, printing checks anymore. Or in the alternative, if you outsource that already, you're not like outsourcing that to one company and sending an ACH file to the bank and doing some wires and still handling all the supplier exception stuff yourself and having all these manual processes. So on day one, those manual processes, those paper checks, the exceptions, the resends, and all of this, the stuff your AP staff spends on manual, boring, repetitive processes, which since the Great Resignation during the pandemic, it's very hard to replace people to do that. It's also very hard if you happen to be lucky enough to be growing really fast, like we are. It's just like higher up for those kind of boring manual jobs. It's hard to do. So this eliminates all that, and it actually allows those people to do much more important work, because some of those people might be working for the company for 10 years and know a lot about your business. They know a lot about the suppliers, but they're actually spending all their time doing these kind of very low ROI jobs, and that we can get out of that. And then there's sort of the other side, and I kind of touched on this when I said it's one of the few areas where you can greatly reduce fraud and then kind of increase productivity and revenue at the same time. So while you're reducing all this cost and saving all this time, because all the administrative tasks and the manual tasks and the paper is all going away, and you're preventing fraud, you're also taking advantage of technology. One of the things we didn't talk about a lot is, the sort of portal that the technology, the portal, the data analytics that we supply our customers with. And most of them have never seen their entire sort of AP picture laid out like that altogether. So this is a really fundamentally different. I mean, I'm actually at a conference, and I had this conversation today with a very large, sophisticated company talking about, and this is exactly what they do. They do some checks, they still have to be manually stamped, and then they send an ACH file to somewhere else. They do some wires through a vendor. They have a relationship with their bank, and this doesn't intersect with your relationship with your bank. Your bank is still going to be your bank that you do your deposits with and borrow and all that. But this is really a different way of thinking about paying the bills. Everybody's paying their bills. Nobody likes paying their bills. And this actually is doing it in the way that we really should be doing it, given modern technology. So to give you a little idea of what the overall service should look like. So you have cloud software to, kind of get the data out. You want to make sure that they have every payment option possible. Some people have never even heard of like an e-check. What's an e-check? Well, when one of our higher education customers had to refund all their students when the pandemic hit, they did it with e-checks because you can send them all over the world and you can walk in any bank and take care of it. Very great option that we had for them, besides checks and ACH and wire and B-card and all that. And then it's really this AP payment operations service that's different and fundamentally different than what companies have with their bank or their one-off vendor who does one thing. So it's really fully managed delivery and operations, all the high-touch supplier stuff that Chris went into detail on, taking care of the data management and security, supplying the reporting. And on top of that, as you're getting people from check to V-card, that's creating revenue that you should be taking part in with whoever you're doing this true AP payments as a service with. So to think about it in a really high level way, you kind of start in this traditional AP where you're in the world of everyone's got to pay the bills. So I got all these people doing all this stuff, and I have 3 or 4 different relationships, and you get the bills paid, and that's just sort of all costs. It's a total cost center. Time, payment costs. Then as if we are working with you, very quickly, most of that payment and time goes away. And then as we start to do this very effective supplier enablement and conversion over to card, you get these revenue generating payments and actually wind up in a net financial benefit. So you're turning what's traditionally been a manual cost center into a much more automated, potentially revenue generation center. We're going to talk about some customer case studies now. So Chris, you want to do this one?
Yeah, sure. So Worldwide Produce, if you've ever been to Salinas Valley out in California, like that's where the vast majority of United States produce comes from, if not a good chunk of the world. And they were 100% check when we started with them. And I think so. The very cool thing that we were able to do was day one. They went from having a whole team of people sending thousands and thousands of checks a week to sending 0, really overnight. And so, yeah, the CFO over there literally said we were a lifesaver. And really, it's not so much that we, saved a life, but we really, I think, improved the lives of his AP team. They were able to do more value-added work, really versus, sending checks. And so that was a great, win for us and for Worldwide. Continue to be a great customer. And of course, since then, we've been able to convert, 67% of their spend over to digital. We're able to move a lot of that to virtual card. And that's really the name of the game, right? It's, get in this, the office of the CFO, that AP team, so those wins, let them focus on more valuable work, take that clerical burden off them, and really ultimately provide a better service, give them more time. And ideally, create a nice little revenue share for, all the payments that we're able to, convert to virtual cards.
So Phoenix Stamping is a manufacturing. And again, you get a very similar quote from the CFO. Finexio is a game changer, a lifesaver, but I think Chris put it well. It's really a life improver. So you're getting a 75% reduction in invoices paid by check and 63% less time spent on AP payments, and actually moved 22% of all their invoices over to virtual card. If you do your research, you'll find out that the industry average is around 3 to 4%. So 22% is really transformational. If you think about your total AP spend, especially if it's heavy check, and getting an interchange on 22% of those invoices, so besides the time savings and the cost savings, and being able to support them really well, that's something to really think about. This is one of those areas where you can get all those operational improvements and time savings and also turn it into a revenue generator. You want to do Vicon?
Yeah, Vicon was an interesting one. We really came to know Vicon during COVID. They were one of those companies that were doing a lot in-house, a lot very manually. And of course, all businesses during COVID, everything just shut down. I remember at Finexio, I flew home on a Thursday, and that was it. That was the last time we ever went into the Finexio office. Vicon, very similar. They've since opened, but sort of overnight, they had to figure out how they're going to make all their AP payments. And so, luckily, Finexio was able to come in very quickly, literally in days, and get them stood up, so they were able to send at least checks on their behalf, and then sort of worked into that supplier enablement, sort of leverage some of those capabilities that we have to convert now 68% of their supplier base over to digital. Similar story, as Bill just mentioned, around 20% of their total spend is on card. It's been a great experience. They've been a great customer, and we hope to sort of continue what we're doing with Vicon and other folks in the space. But just another way where I think working with a nimble sort of AP company, like Finexio, can be a big benefit to really any company in any industry.
Yeah, and to touch on what Chris just outroed with, so you've seen construction. This is higher education, produce. This works in every industry. Every industry needs to pay the bills, and our solution is horizontal. It can be tailored to the industry that you deal in. And I mentioned, the organization that we sent out all these e-checks for when COVID hit. That was Amherst College. So they estimate $50,000 in combined financial benefit from the cost savings and the revenue. And 60% of their payments turn to electronic. That's just a huge reduction in workload. And then 40 million of that converted to electronic spend. So we work a lot in higher education. And I think generally in higher education, they're very interested in sort of the efficiency and the operational smoothing out of the payments that they have to make. And you can see that in the quote. This CFO is talking about payment efficiencies and actually having a better relationship with their suppliers. So you've seen a bunch of different industries, a bunch of different benefits. But, the key is kind of moving out from the old manual days to the new days, which I think a lot of AP departments and CFOs look at as like, I don't know if we can do that right now. We're doing this other thing. We're doing the CRP thing. We're doing whatever we're doing. But actually, you can. It's actually really easy. And that's the conversation kind of we want to have with you. So since I'm so talk a little about who Finexio is and then how to get in touch. We are really changing the way the industry does this. There's a lot of sort of role players, companies that do V cards, somebody might outsource your check writing, that do pieces and bits of this. But what we saw when we were all together, the founding team, was that what was really needed was an as a service model for doing this. And that's what we've really built at Finexio. And that's why you see investors like JP Morgan Chase, who's our largest single investor, Discover, Valley Bank is about a $50 billion bank that's invested. So, and we have our partnership with MasterCard. So you're seeing that these really large, sophisticated organizations are recognizing that what we're doing at Finexio is unique in the industry. And I think the benefits are therefore really unique for our partners. We have, I think it's closer to 18 channel partners now, tons of customers, a huge install base. We can pay in any form of payment. So the value prop of partnering with Finexio is unique in the industry. And that's why we've attracted, sort of this kind of attention from these major international players in the industry. So you can contact me. I'm the Chief Commercial Officer. All the sales team sits with me, and we're happy to have this conversation with you, hoping to have this conversation with you. And we want to thank you for joining us. And I'm going to turn it back over to Yvonne now, because there's a couple takeaways you get for attending the webinar.
Thanks, Bill. So here's a few assets to expect to follow sometime after the webinar, along with the recording. So first, we have our IOFM white paper that we did with them, which outlines in detail the virtual card information that we reviewed in the webinar today. And as you may be familiar with them, IOFM is the leading organization in providing training and education and certification programs specifically designed for professionals in accounts payable. And then we're also going to give you our Finexio version of the virtual card one-pager that runs you through the benefits and security that virtual cards provide you and your suppliers. And now we're going to get into the Q&A. So thanks so much for joining so far. We did get a question that came through on the chat. So it says here, for many small businesses, they get one-off fee card payments from their customers. Upon receiving a virtual card payment, they must retrieve payment instructions from a third-party portal, manually key a card number into the terminal, and then apply the remittance details into their accounting system. In addition, they tell me most companies don't pay upon invoice receipt, but still have terms. How have you improved this process for small businesses?
I can take that one. So there's a few different ways in which we can deliver payments. Certainly you can go through a portal, sort of access your information. Like I said, there's the card by mail type solution, which is really more geared towards a small business, where all the information is right there. Card number is right there. The remittance information is right there. And so it tends to be, pretty straightforward for them to process that payment and really, know what they're getting paid for. So again, there's no, this is certainly not to say that it's a perfect experience, but that tends to be fairly efficient for those smaller suppliers that are getting one-off payments, that don't necessarily want to have to go log into a portal or click a link. But I think regardless of certainly how Finexio delivers payments, we make it extremely easy. For even those suppliers that would deliver email payments for, there's nothing to, they don't necessarily have to log in. They can use the information that they have at hand via the email that we send them to access their payment. They can still do so securely, but aren't, required to necessarily go in, log in, create an account, use an MFA, et cetera. So I think there's a whole host of ways that we think about that. But again, we try to take feedback from really the entire supplier base that we work with and look to tailor solutions that, while encourage, card adoption, card acceptance, sort of meet them at least in the middle, such that it's not a burden for them to accept.
Thanks, Chris. Another question we have here says, a lot of my vendors I pay are smaller in size. I don't think I will be able to switch them to virtual card. How do we increase our adoption rate towards these other smaller vendors?
Well, I guess I'll take that one. Similar story there. So what we're able to do with a company like Finexio, and I think it's really only because sort of our scale, and sort of size and really the methodology that we use. But we've gotten very good at identifying, really, regardless of who the supplier is, their likelihood to accept, right? And so that leverages everything from these third-party data sources, right? So we have, a direct relationship with MasterCard, with Discover, who can tell us, basically who accepts, who doesn't accept, or let's say who's at least capable. Doesn't necessarily mean they're willing. We won't have time to get into that. But then also, if you look at some of the, the machine learning, analytics that we do to really go and predict, hey, this type of supplier, think industry as an example. Industry is a very good indicator of likelihood to accept. And so if you sort of marry those things together, then you can really hone in on the likelihood of a particular supplier within a particular industry of a particular size and their willingness to accept. And so that's where sort of the multifaceted strategy that we take really helps us, better target those suppliers. And oftentimes what we find too is even if we, offer or send them a card, if you will, they still have an option. Like, we don't necessarily force them, but we really try to make sure we have the best possible interaction and conversation to really, support them through that, decision-making process. And what you find is a lot of times, suppliers will just take it as a course of doing business, or they'll do it because you actually had a productive conversation with them and they can actually start to see the value in it. And so those are all things, like Finexio, being able to develop, learn, really sort of hone, sort of the talk tracks and the way we communicate to increase that acceptance. So I think the idea of you sort of just being an independent company, doing it yourself, sort of ad hoc, it's going to be, long road to hoe, if you will. But that's why we work with somebody like us who has the expertise, has taken the time, has really learned from, past mistakes, what works, what doesn't work, to make sure that those conversations are as productive as possible. So you get maximum conversion. And again, this is not a panacea. You're not getting everybody to say yes. But again, I think as Bill said, 20%, in that range of card acceptance is pretty transformational in terms of what it can mean for you and your organization, in terms of revenue share, taking, a lot of that lift and burden off of your AP team or your finance team. So again, it's that multifaceted approach that we bring. I think that makes us successful, and we are obviously more than happy to share and deliver that to our customers and their supplier base.
All right, thanks, Chris. I think we have time for one more here. We have a question. I haven't had any fraud attempts at my company, so how does this all apply to me?
Well, you haven't had any fraud attempts you know about at your company. This is really the answer. I've had this conversation multiple hundreds of times because in prior lives, I was actually doing cybersecurity assessments and fraud assessments, and we would go in with my team and actually write $1 million check on the CFO's account and then present it to him, and just to show that, hey, you might be a little more vulnerable than you think. So it's not meant to be a sort of like know-it-all remark. It's just that the statistics show that you may not be aware that there have been attempts for fraud, or there may not have yet been a successful fraud attempt, or one that you're aware of. When I was prosecuting and when I do the fraud webinar, almost every example that I use, we look at about 5 case studies when I do the fraud webinar. Everyone had been going on for years when they were detected. So the fact that it hasn't been detected yet doesn't mean it's not happening or that it won't. So I just think that that's a great question that shows the need to have this conversation and be able to establish for your organization and your business that you're actually doing everything you can. You don't want to be like after the fact going, oh, I should have done that and we were going to do that, but we never did it. So that should be the cue to have that conversation, really.
All right, thanks, Bill. And for all on our Zoom webinar today, thank you for your time and attention. We hope you found this webinar to be educational and informative. Look out for the email to follow after the webinar later today with the recording, and see you again on a future Finexio webinar. Bye-bye.
Thanks, everybody.